Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to Heather Dreves today. She's the Director of Funding at Secured Investment Corp. And is also a fund manager with one of the fastest growing companies in the private money marketplace in the US. And they focus on residential real estate investment. She's passionate about helping self-employed entrepreneurs and their families build wealth and succeed in their business ventures and helping investors deploy capital that is looking for a high-yielding passive investment. So this is great because, market has shifted and we know it's shifting and inflation is rampant, even though government is trying, but I still think the core inflation is over 8-9%. So this is, perfect timing for our podcast because I do want to talk about residential real estate markets. So welcome, Heather.
Thank you for having me. I'm excited to be here.
Absolutely. So we start with this question so that we start on a lighter note. Tell us something interesting or funny about yourself.
Oh, wow. Well, maybe interesting and probably funny to some is I raised 2 boys. So I think you have to have a sense of humor to do that.
Yeah.
But yeah, I've got interesting about me. My husband and I have been married 28 years, which is not common anymore.
Right.
I'm pretty proud of that. And we have 2 great kids. I call them kids, but they're young adults now. We have a 25-year-old that is a fireman. Full-time fireman. So that's a pretty sweet gig, especially if you're active in investing in real estate. And then we have a almost 23-year-old son who's getting his master's degree in kinesiology. But probably the most interesting thing is my husband and I met playing college soccer. So that was where we met one another. And back in the day, there weren't a lot of women's college soccer teams. So it's such a different place now. And it's exciting to see all the opportunities for female soccer players. So we're big soccer junkies.
That's awesome. Yeah. So I'm pretty sure you watched the FIFA recently, right?
Yeah.
Great World Cup, actually. It was
World
really
Cup. We watch a lot of English Premier League.
Right, of course.
A lot of Turkish soccer, actually.
Oh,
My
okay.
brother-in-law's Turkish, so we get drug into watching Turkish soccer, but yeah.
So let's talk about, because this is an investment show and wealth building show. What was your first investment and how did it work out for you?
Well, so my husband and I's first investment was a fix and flip.
Oh, wow. You started with fix and flip.
We just jumped in with both feet.
Yeah, and hands.
Being in the industry, being in the private money industry, I thought,
I see.
How hard could it be? My background comes from working with investors that I help deploy their capital. And a lot of times we're deploying that through private money loans, and creating cash flow through, those types of vehicles. But I decided to go on the other side of the transaction and do our first fix and flip. And probably funny story, it took us way longer than we thought.
Right, of course, almost every time.
Yeah, we were those investors at first that said, oh, we can do this. We're not going to pay someone to do this. So honestly, after this job, I'm going and helping lay tile and we're demoing a house. And I mean, it took us a year.
Wow.
There were lots of unforeseen things that came up that we didn't plan for. And we broke even. So we had money tied up for 12 months, 12 months, which is way longer than that should take. And we got out whole and it was a great project, but I joke that I must have watched too much HGTV. And it was not like Chip and Joanna make it look. It's not glamorous. It's hard work. But that was really kind of my first taste of it. And it's kind of addicting. Every time we've done one, we're like, we're never doing that again. We'll just passively invest. And then, 30 days later, we're looking at another deal. And you get kind of...
It's hard to stay away when you are in the industry, right?
It is.
So what kind of real estate do you invest in now? Do you mostly invest passively, or you also do fix and flip, or actively invest in every
Yeah,
type of real estate?
we still do the fix and flip, not as much. Right now we own rentals, so we have single family residential rentals because in a downturn market, real estate investors turn into landlords because
Yep.
typically, historically, rents increase and the cash flow is so good. But we consider multifamily, we've looked at some duplexes and triplexes and things like that. But, things right now, we're more focused around the cash flow side of things. We're both very busy. So fix and flip is great. It just requires a lot of your time. Even if you're not doing the work yourself, you're managing subcontractors and making sure the project's getting done. So we would prefer to be more on the passive and then investing in like our real estate fund and notes.
So yeah, and I agree. No real estate investment is passive when you have your name on the title, right, or mortgage, right? Even if it's a single family rental, you still got to manage the property manager.
Yeah.
But when you jump to the fix and flip, it's a whole different world now because your money is tight, you're answering to your investors, and you need
Mhm.
to get that thing done as
Yeah.
soon as possible and get it out of your plate, right? So you mentioned about real estate funds, and I was looking at your bio. Tell us why real estate funds are one of the best alternative investments we can make.
Well, I think for a lot of reasons, but a lot of the feedback that I get from my clients, and that's really kind of where I come from making that statement, is it's passive, and what I mean by that is I have clients that are like me. They've done the fix and flip, they've owned tenants and toilet rental properties, and they're at a place where they like the real estate asset, right? They want to invest in something that is secured by real estate, but they don't want to get the call from the tenant in the middle of the night that their toilet's plugged, or they don't want to be out
Right.
trying to lend their own money or fix and flip their own house. What a fund can provide is that same type of investment, that same type of security. But now you have a fund operator. As long as you find a good fund operator, that you align yourself with, and it's really a partnership. You need to have confidence in the people that are managing that fund and confidence that they have the experience and the infrastructure to manage those types of assets. You can reap the benefits of all those things, fixing and flipping, owning rentals, lending your own money, but you align yourself with an operator like us and you can invest your money and it's passive and you don't have to deal with it. The operator is the one that deals with all of those things. And so we actually are pretty proud of the fact that we have two funds. One is for what people would be considered as high net worth accredited investors, which is pretty typical with a fund. Most funds or syndications, you have to qualify to invest in them. We actually have a fund for that. And then we actually have a fund that is for unaccredited investors too. And I think the biggest benefit is you're hands off. You're not getting the calls in the middle of the night. You can still get double-digit returns on your money without a lot of the headache. And then the other big benefit with a fund is, especially with ours, is we get a lot of clients that use self-directed IRA accounts, which is a great tool. If people aren't familiar with using tax-deferred accounts like IRAs and 401ks, that kind of a vehicle with a self-directed custodian, those dollars can be invested in our funds. And most of our clients aren't at a place in their life where they're needing to take that money out, to taking what they would call required distributions on their IRAs. Yep. But what they can do is they could set their account up in growth mode. This call I just got off on when I raced to do the podcast was these clients that have self-directed accounts, but they're still working and they don't need to take their required distributions on their IRAs. They'll set their account up in the fund and they just reinvest their earnings. So now they can compound it. So they don't have these small dollars going back and forth to their accounts and then they sit there undeployed. So I think that's a big benefit to a real estate fund also is if you find the right one, a lot of times you can just set it and forget it. You'll always know what your earnings are. Hey, I made X amount of dollars, but they just roll it at the fund level. Now your equity compounds sometimes monthly, sometimes quarterly.
Right.
And that's pretty powerful if you run the numbers on those types of investments.
Thank you for explaining that. So let's talk about future. And I know with your experience, I want to hear, where do you see the future of residential real estate markets headed?
Yeah. Well, you and I were talking before we started. We're
Yes.
excited.
Yes.
And you hate to say that out loud because it makes you kind of sound like, you want to take advantage of
Right.
downturn markets and people having to sell properties, but we're excited about where the market's going. I mean, it's been inflated for several years, right? You and I were just talking about your neighbor and the property that has sold twice and increased almost 70% in a couple
Right.
of years. It had to burst at some point. Do I think it's going to be like 2008? No, because no lenders have been lending 120% of the value, right? We all took our wounds from that and learned
Yep.
from it. But I think it's a different environment because I think you still have people that own properties. If they do need to sell it, they have equity, right?
Yep.
But I do think the values are cooling off. We're seeing in our local market, we have not seen a massive decline, but we're not seeing the increase in value that we saw
Yes.
even 6 months ago,
Right.
which is an opportunity for people like us, right? We have more horsepower behind us as a fund to go and pay cash for properties instead of your one-off guy trying to work a deal with a guy that's a distressed seller. We can walk in, hey, we could buy this property tomorrow. So we have more buying power. And we're excited. We think that there's going to be a lot of opportunity in the market. And if you adjust your numbers and you're buying right, there's opportunity to buy it now, sometimes rent it because the rents are going up. So we're getting better cash flow. And then we wait. And once interest rates start coming down, we're going to see values start to go up again. We could refinance it. We could sell it. We're not seeing in our market as many properties for sale. That has cooled off because I think people just aren't at the place where they want to accept that their house isn't what it was 6 months
That is the problem right now. I see, because one, they have low interest rate, which
Yeah.
which they got during 2020 to 2021, and second, they are not ready to accept that the values are cooling off or going down.
Well, and most of those people would, upgrade, right?
Yes.
Every 5, 6 years. And you're right. Like, why would they go refinance a loan that they got at 2% to pay 6 or 7? And so they're just kind of on the sidelines. Where we've had a lot of opportunity is still distressed sellers. We've never really bought off the MLS market. We buy off market deals. We go to auction. We find distressed landlords, and that's been a big opportunity too, as you have some mom and pop landlords that went through COVID. They couldn't enforce rents, and now they're kind of at
moratorium.
and they're like, I don't want to deal with these people anymore. They're not paying. I don't want to spend money to try to evict them. So we've bought a lot of properties that way, and then worked with the tenants to either get them out or get them paying. So I think the opportunity's out there. I think the biggest thing is you got to change your buy box, right? Like what worked for us 10 months ago is not the way we're buying now. But like I mentioned before, we're excited. We see the real estate market, shifting and cooling off as an opportunity for funds like ours and investors. So we're pretty bullish on it.
So how do you see, and I know right now there's the same thing in my market, not a lot of inventory, right?
Right.
How do you see the real estate market react during the second half of 2023?
Well, we have also seen sales cool off. I mean, we did not buy any assets in November and December and almost halfway into January. We are starting to see people that we made offers to on houses in October come back to us and say, well, we think we want to take your offer.
Right.
But it's like, well,
it's not the offer you're going to get now.
that's exactly right. It's like you should have took the first one. But I think, for the second half of the year, we feel like sales are going to pick up again. They're already starting to. We have deals under contract, twice as many this month as we had, in January. I guess February we had more. So we think that that's going to pick up. We think people are going to come to terms with the fact that the new norm is not 2% interest rate on mortgages. You know, where we're at right now is normal, but we all got spoiled. You know, we had free
last
money.
10 years.
Yeah. Even just the last 2 or 3, it's
Last
just
2 were bad.
stupid money. You know, and I think people are going to finally come to terms with, you know, a 5 and 6% interest rate isn't terrible. You know, what we experienced the last 2 years is not normal.
Right.
So, we're bullish on it. We think it's going to be where there's still going to be more opportunities to buy and then also to sell.
So you think there'll be more opportunities in Q3 and Q4
Yes.
than now?
Yeah. Oh, yeah.
And what are some of the markets you guys operate in?
So there's 2 sides to our business. One is the debt side. So we lend money.
Right,
We're
to
private lender.
investors.
And we're just about nationwide. I
Okay.
mean, we are in almost every single state. Some of the hotter markets we're seeing are the Carolinas.
Yes,
we're-
Florida and Texas.
Yeah, New Jersey, we're seeing a lot of opportunity there. Florida is a great market. People are moving to Florida like crazy. We love the Florida market. We like Texas.
Yeah.
Illinois is still a pretty strong market for us. And actually, Detroit market is kind of regentrifying. Yeah, we're doing some lending there. So that's the debt side of it.
Okay.
The actual acquisitions that we buy are always only going to be local, and that's going to be specifically in the Pacific Northwest. So Spokane, Washington, and then in a town called Coeur d'Alene, Idaho, which is a northern Idaho area. It's a very popular area. Both Spokane and Coeur d'Alene have had a lot of growth, and we continue to see it. Right now, it's just a big inventory issue. You know, people want to move here, and people that live here want to sell, but now they, you know, are kind of priced out of the market, you know, because they can sell their houses and make really good money, but now they need a place to move. So that's where we see the opportunity with the rentals. You know, now there's a huge need for rentals also in our market. So, you know, we're focusing both on the fix and flip, but then also on buying and cash flowing rentals also.
And what are some of the strategies you use to acquire in your local market?
We pull a lot of out-of-town homeowners lists. We have an acquisition team that sits outside this room, and that's all they do is call. So we'll find those. We work the foreclosure list. We do buy quite a few properties for people that, instead of them going all the way to foreclosure, you know, we'll buy their piece of real estate. They get some capital, they can go relocate, but mostly off market. We used to go a lot to auction. That has not been as advantageous as it was. You know, there was that moratorium for 2 years?
2 years, yep.
And it still hasn't caught up. I mean, you still haven't. I think you will start to see more of those, you know, because they lifted that quite some time ago. But, you know, foreclosures take forever. So, you know, by the time you actually see those hit the market, they're probably a year, you know, down the road from when they started the foreclosure. So those are just some different strategies. But honestly, we're always looking at changing it because, you know, what worked 6 months ago is not working right now. And we just have to be able to kind of make those small tweaks and get creative. We're seeing a lot of opportunity with seller carried back financing when selling, and also assuming people's loans. So we've been able to buy some properties where we've assumed their loans that they're paying 3% off. Yeah, those are great deals. So those are some other strategies.
No, those deals are great because you are buying at much lower price, but you are also assuming their loan at much lower interest rate. So it's a total win situation, win-win.
We like those deals.
So let me ask you this. What are some of the mistakes you have made with your own investments?
Trying to do things myself. Trying to do things myself. Also, you know, and just in full transparency, we bought some real estate and used private money and didn't refinance it quick enough, and probably would have had a little bit better cash flow if we had taken advantage of that cheap money. But waited. You know, those are probably the biggest ones. But I think, like, and I even look at our clients, you know, the ones that we lend money to that have the challenges, they are the ones that try to do it themselves. They don't want to hire a subcontractor because, you know, they look at the money, you know, and say, well, what I'm going to pay double for that, but time is money. The quicker you can get in and out of those deals, your profit's better. That's the reality. So you have to work those numbers into your equation.
I call this as every time as an investor, we look at ROI, return on investment, but we don't look at ROT, return on time. And that is a big component of our return, right?
That's a great point. I'm going to write that one down, return on time. I love that.
Yes, every time I tend to look at experts, right? If there is someone who can do it better than me, let's go with that person, right?
Absolutely. Yeah. Our CEO says that he surrounds himself by employees that are smarter and do things better than him.
Of course. Yeah. That's how things work.
Yeah.
What has been your best deal so far? Like if you can share numbers.
Oh gosh. We have a couple deals. We have, I don't have exact numbers in front of me, but we've had a couple deals that we've bought and turned in 30 days and not done a thing to them, and that's more of like
the last year, right?
Yeah, that's a whole, that's not,
you didn't have to do anything.
Those wholesale deals where you buy it and you turn around and market it and it's gone. The ones that we haven't been as profitable on are the ones that we try to do too much to. We had one that we literally took the roof off of to add square footage, and our return on investment was like 3%. And we've had other ones where we put lipstick on them and we'll get a 25% return, on something that we held for 90 days. So, we've learned that you don't want to over rehab and improve properties, because a lot of times you just don't get the dollars out of it. It takes too long. You have too much upfront cost. The other thing that we focus around, and my husband and I do this, and as well as our organization, we buy properties and invest in things under the FHA cap. So we will not lend money, nor will we buy a house or a property for that matter that the resale value is over the FHA cap, because when you get over that FHA cap, your pool of buyers is, a fraction.
Right.
The other thing too is if you're under the FHA cap, if you can't sell it, you can cash flow it. Usually those, like a 3-bedroom, 2-bath, those are great rentals, and the rents are so amazing on those that, if the project doesn't go as planned and you decide you just want to cash flow it for a while, you can get really good rents to, create cash flow or service your debt.
Oh, this was great. Thank you. Are you ready for fire round?
I'm ready.
Would you be changing any business or investment strategy because of this inflation or upcoming recession?
Yeah, like I mentioned to you before we started, my husband and I have changed our strategy to hold rentals right now rather than fix and flip. They're more profitable for us at this point. And, we're not really necessarily looking for cash flow, but our strategy is, hey, in 10 years, when we want to be done and live off of our investments, we have these cash flowing properties that we could keep or we could sell them.
Right. That's great. Favorite investment, real estate or business book?
Oh boy. Well, what's funny is our company, we do a book of the month club. So we pay our employees $100 to read a book every month. And they have to do a book report on it. So right now I'm kind of going old school. I'm actually having my team read Rich Dad, Poor Dad.
Oh, okay. Yeah.
That I read forever ago, but I don't think it ever gets old.
Nope. Any tool or website you recommend or you cannot live without?
Oh, gosh. There's a lot of them.
Yeah, you can mention them.
I know. I use Rentometer a lot.
Right. Yeah.
For that, I mean, honestly, as silly as this sounds and as simple, I use Zillow a lot.
Yeah.
Just as like the initial. We actually have a system here within our company called Senfuse. And it is a software system where you can put a property address in, and you essentially can pull up and see what the property owner owes on the property. You can get a small chain of title on it. That way, when you're making the offers, and they come back with some ridiculous counter offer, you can, at least you have the knowledge like, hey, they only owe X amount of dollars. And you can negotiate a little bit better. And so that's something we call Senfuse. And I use that often. Tells you who the property owner is, tells you what they owe on the property, when they bought it. And then, like I said, it'll give you a chain of title too.
That's awesome. Any advice for beginner investors?
The biggest advice I can tell people is two things. One, you just have to get started. And the second is you don't have to have big dollars, whether and I look at investors as really kind of two buckets, really active investors that are hands-on, and then my clients that are really passive that, most of the time have capital, and some do both. But one of the common things I hear from people is, I thought I had to have a lot of money to get started. No. If you're active, you got to have the right deal. The money will come. The money's the easy part. Finding the good deal is the hard part. And if you're passive and you're not, someone that wants to manage a rehab and deal with tenants and toilets, we have a fund that yields 7 to 8%, and it's got a minimum investment of $1,000. Wow. Everybody can get started with that. Everybody. Right. And I just think that so many people sit on the sidelines because they think that they have to have this large amount of capital to start investing. That's just not true. So my advice is get started, get a hold of us. You can invest in real estate with as little as $1,000. There are opportunities out there. You don't have to have a large amount of capital, but you do have to start somewhere, because if you don't do it today, you're going to be 5 years down the road having the same conversation with yourself. Well, I'll get started next year, or I'll get started when I have more money. You have to get started.
I agree. How do you give back?
Oh, we do a lot of things. We have a ministry. Our company has a ministry. He's the solution. We do a lot of things through that ministry. We go over to Mexico. We build homes once a year. I believe it's September we go. And so we give back that way. We do a lot of team building activities where we go to some of our local charities and do Habitat for Humanity, where we've built homes. We've done some other programs where we assist senior citizens with assistance on their houses, cleaning yards up and things of that nature. And then we do quite a bit of donating too. I think it's really important to give back. If everybody looks at their story, that is in the position you and I are in, somebody else helped us along the way, right? And mentoring and educating is also a big part of that for me. Educating people with the tools they need to make good investment decisions, and really mentoring people. I just got off a call earlier this morning with a client of ours that bought a program, and his mom just had a couple strokes, and so he wanted to pull his investment out of our fund. And after talking with him, he has all the tools. All he needed to come up was $5,000. He's trying to build an ADU unit in his backyard for his mom, and he needed $5,000. I said, why would you pull your money out here that's earning 8% when you have the tools to start brokering loans, and you just haven't? You could earn $5,000 with one loan you broker. So mentoring him to get refocused and have the confidence in himself. I said, all this information, you just have to put yourself out there. So I think that's another big way to give back to people, is everybody has a desire to, be in a better financial situation and create wealth for themselves. And I think that's something as an organization we also do on a grand scale, is, we're here to teach people and educate people. And, if they follow the path and the programs that we put together, they will create financial freedom through real estate. But sometimes they just need a little more coaching and a little more, just encouragement that they can do it.
This is awesome. How can my listeners reach out to you?
They can get a hold of me at our website at Secured Investment Corp. I don't know if you're going to put the link to that up there, but Secured Investment Corp. We've got lots of information on there about our funds. We also sell notes. So if any of you listening are really active note buyers, we sell a lot of notes also. And they can personally get in touch with me there. I'm passionate about what we teach, and the opportunities that we provide to invest, whether it's passive or active, and I'd love to talk with them more. So just visit the website and they can schedule an appointment with me.
Thank you so much, Heather, for your time today.
Absolutely. Thank you for having me.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing.